Welcome to DXD Monetary Policy Committee meeting for February 23rd, 2023, 1600 UTC. So this is the monthly meeting to go over aspects of DXD monetary policy as it relates to the new token model and some other elements. So we can see here just an agenda for the day. We go over some redemptor stats. We pull these together and kind of look at how that's affect DXD volume and liquidity as always. And then, some of the other adjustments we can make and open discussion. And actually, I'm looking at this now. This is a better point for the agenda. So key learning so far, I think would be a good opportunity to get kind of insight into how things have gone so far and what are good ways to improve. And then as always, kind of continuing the long-term tools conversation, figuring out what would need to be done on top of the existing tools that we have. And then also wanted to just open up for discussion a little bit about the Treasury Manager search that DXDAO is undergoing now. There's been a lot of really good candidates, I think, come in, and we've had some discussions there and just wanted to carve out some space for the DXD folks to have that. So does everyone see screen here? Yeah. So just reiteration of the DAO commitment. I think this is something that I at least find very important, that DXDAO has credibility, that when it passes things, it follows through on those. And that is a testament to governance executing on the will of the voters, the will of DXDAO governance. So the new DXD model really had a couple big commitments. The three ones, right? Introduce these new tools in DXD monetary policy that would enable a fair and liquid market for DXD. Establish this DXD monetary policy committee to carve out a separate governance sphere for DXD holders specifically. And then third, change the social contract where there's a funding commitment of 6% of the treasury size to further for operations and product funding. So those are the kind of three things that we're thinking about as we go into this. Looking at volume and liquidity over the last month or two here, you can see here it has gone down a little bit, but has still been consistent with a lot of activity switching to Swapper mainnet. So just to kind of look here at some of the numbers over the last, these are, I think, basically 28 days here each. And so we're having a daily volume around $20,000, which is down a little bit from there. But you can see a lot of this activity has moved to Swapper mainnet, and that's mostly just because Swapper's liquidity size has increased because DXDAO is now provisioning liquidity directly on that. So it's taking up a larger share of that. I should note, when we're counting this volume, we're not including the cow swap trades that DXDAO is doing through the new token model. So that's actually a huge amount of volume that is happening, but I don't think it's necessarily fair to use that as an accurate measure of the daily volume, even though obviously a lot of this volume itself is correlated with some of the monetary tools being used. But yeah, I think this is, I think the key thing here is more looking at how Swapper has some on-chain liquidity, and we're looking to increase that more, separate from doing the buybacks and other things. So the bigger, I think, moves in the last month or two have been on the redemption balancer stats. So Ross, do you want to maybe go over some of these and highlight?
Sure. So the redemption balancers have been going on for 2 months now. There are a total of 13 with almost 10,000 DXD redeemed, and then 2,872 ETH and almost $2 million of stables have gone out for those DXD redeemed. You can see this data here. This is also all on the spreadsheet. Link is here. Note that average price of DXD that's been acquired is $712. You can see the current redemption price is $758, and then this redemption price, if no redemptions, that's the price that DXD would be at if there hadn't been any redemption balancers. You can actually look down here at the bottom and see what that price would be if there were no buybacks at all. So that looks back, whatever, the last year or so, for all the buybacks that have gone on in the past. I actually think it's quite interesting to look at. We're sort of up at the 70% of redemption balancer, like at the 70% redemption, but a lot of the buybacks earlier on were much lower than 70%. So you can see the sort of it was about $3 million, I think, that bought the same 9 million, sorry, 9,000 DXD earlier. So we've now had another 9,000 DXD bought, and it took about twice as much in funds, but that's just sort of naturally what happens as the price goes up and as the NAV percentage goes up.
Yeah, and just a quick, so I have a number on the buyback amounts, the average purchase of those. So this would not include the redemption balancers, but everything that has been purchased first through Mesa and then now through CowSwap, 18,500 DXD at 0.27 DXD per ETH, right? And so right now I think we're trading at 0.45. And if you look at the average mint from the bonding curve, I think it's actually close, it's below 0.4 in terms of like the average DXD was when it was minted there. So yeah, I just think in terms, I mean, obviously this has been almost, this is going back since May of 2021, so it's a long time, but it does kind of underscore that there was, already 14K purchased before this new token model, which since that's been passed, there's about a little under 12,000 that's been acquired.
Yeah, and it has pushed the price up towards that 70, where it is close now in the high 60s, I believe, close to that 70% number. And yeah, so can you go to the next slide? Yeah, so this is just looking at the redemption balancers. We can see that the first two were the biggest, and then these smaller, a sort of a long string of smaller ones have been happening since then. I think one of the things that's quite interesting to look at is, so of course these first two wouldn't have been possible to include as CowSwap buybacks, but all of the smaller little ones here are of the size that they could have interacted directly with CowSwap to get the same result, essentially. So yeah, we may have big ones again in the future, but there haven't been in the last month. Yeah, okay, next slide. You just see that the DXD ETH price has remained mostly constant. The DXD price is sort of, it does its own thing. I think this data really needs to be looked at over a longer period of time. It's hard to sort of figure out exactly what the signal is with the volatility of ETH and other things moving up and down
and just like it's obviously DXDAO from the beginning has been highly invested and correlated with ETH, and I think that's very much part of the ethos. I think in terms of decentralization, but I also think in terms of people's exposure and kind of commitment to an ecosystem. So the ETH price is just relevant. I know that people are tracking, and it's interesting to know how that changes with how the price of ETH goes up or down, right? So we can see this from when there are proposals submitted for the CowSwap orders. Since those orders are priced in ETH, we get like a snapshot of what the price of those has been at, and counterintuitively, when the price of ETH goes up, the price in ETH to DXD terms actually goes down a little bit because the treasury is only 2/3 ETH. So then like the value of that goes up in general. So you can see here, the three ones have been submitted at slightly different amounts, right? This is 0.4642, this one's 0.54, and this one was 0.457. And then the most recent one was also at 0.457. It's basically the exact same amount. We can see here in the first, yeah, you can see here 0.46. Probably useful to track DXD price versus the theoretical basket of 2/3 plus 1/3 USD to show actual relevant signals. I completely agree. The one trick there's two tricks to this. Being able to track that over time and be able to treasury, I think would be really interesting. We could just track that. And then the other issue with this is you do have to commit to a single ETH price to track that. So if that would be at the beginning or not, but I think that's a good index to use. And it's very simple. I kind of like this as a very simple, because a lot of this is what is the as an asset, as an exposure, and I think 2/3 ETH is a pretty nice one to be at. And then also in terms of having the liquidity to exit, I think is a very strong selling point. So I do think it's very important to be aware of the ETH exposure, and that is one of the things that maybe jumping ahead a little bit, but when we get to using redemption balancers versus the cow swap orders, the cow swap orders are right now only in ETH, primarily because the price of ETH is fluctuating so much that it's hard to do that over the 16-day period. And so whenever we keep using those orders, that actually distorts the treasury a little bit. And so we have to be mindful of that to make sure that we're keeping it in this little soft consensus of a 2/3 exposure to ETH. So, yeah.
Yep. Yeah, if you just jump to the next one. So this is looking at the treasury value in dollars and ETH. Data here is from looking back at the spreadsheet. So there could be some slight inaccuracies on the sizing there, but you can see the relative size of the different buybacks at the bottom. Here you see Zag Zhao's at the beginning on the 18th of January, and then there were a number on the 27th as well, and then on the 28th, the 11th, and the 21st, you can see the 400 ETH cow swap orders there. So to me, the sort of big piece here is that there hasn't been this mass outflow from DXD. There have definitely been redemptions. There has been money going out, but it has been it's been a reasonable process, and it doesn't seem like it's endangering runway. I'm sort of getting ahead of myself here. So we have a few things looking at the learnings from these 2 months of redemptions. The first piece being just that they've all been approved. The DAO is building credibility that they will be here. We understand that there can still be process improvements on that, but in terms of credibility, there's I think there's a good track record so far. We have the 2 larger redemptions right at the beginning, and then a tail of smaller ones. And then there's also the 1,200 ETH that's gone out on cow swap. As I mentioned before, almost all of the smaller orders could have been executed via cow swap without having to send DXD to the DAO, without having to wait the 8 days. So we probably should be thinking a bit more about what makes people choose one way or the other. Is it just a question of whether people are aware of the orders, how to interact with them? Because if we're doing them anyway, they are definitely they should be an easier way for smaller holders to sort of exit in that way. And so all the recent redemptions and the buybacks have been occurring at 7% NAV. And then the DXD price is still lagging that. It's a little below. I think that's reasonable to expect that it won't be exactly at 70%, but it's worth tracking to see how that changes over time. And as I mentioned, it doesn't appear that there's a rush to the exits. There's still plenty of runway. The funds are still hanging around, and there's so the 6% product funding commitment is still there. So then that would be 1.7 million based on the current treasury size, which is about 10% less than the current 2023 first half of 2023 budget extrapolated over a year. So we're sort of still in that realm, and I think it will be a useful tool. And when we come to the second half budgeting process, to sort of have a good sense of what what that rate is and how much money is available.
Yeah, and I think that's it's a signal kind of from DXD holders, right, in a way that I think is, introduces some fiscal discipline in terms of being able to allocate resources more effectively. And I also think it's a good signal to a DXD holder that is interested in, why should I be holding DXD? It communicates the expected outflow of the treasury through product development and operations funding. And that is, I think, a way of communicating, okay, well, that's basically like the amount that DXD could go down on in that time, just based upon the treasury, because that's the overall funding commitment. And then there are other things that will make DXD hopefully go up over that time. One, the treasury earning some yield. Two, the products earning some revenue. Or three, other assets in the treasury kind of going up in value. And I guess the fourth one, of course, is redemptions themselves. So we just mentioned before that the DXD prices increased 10.9% from redemptions. So that's already more than the potential 6% decline that you would get from a product funding and commitment. So there's just a couple different elements to think of there. The other things to kind of note in terms of what affects that and what DXD holders should be thinking about here. The other one is in terms of contributors vested DXD. So that's an issuance amount that happens. You can see that on the chart. So contributors receive a portion of their compensation in DXD, and this is vested over 3 years with a 1-year cliff. So you can see that after 1 year, you start to see some DXD issuance, so that affects the circulating supply. The other thing, and I want to copy this, that obviously would affect things is revenue. And, I think one of the underrated things maybe about Swapper is that there is kind of some revenue. I think this was collected just 2 or 3 months ago. So, Swapper it's doing about 100K, I would say, in revenue a year, maybe a little bit less than that. So that is kind of some revenue that we have on that. And then if you look at some of the yielding that, just the ETH stake yielding, there is like some revenues coming in there. So that's another important element to the equation. And I also think going forward, like, having some, supplementing some of the treasury burn with actual revenue is very important into long-term sustainability. And I'm hoping we can get there. No.
Hey, Chris, Daddy Matty asked here, do we have an analysis that relates the redemption KPIs to runway stats? I'm not quite sure I understand the question. Maybe you do. If not, Matt,
yeah,
if you wanna...
I'm happy to elaborate on that. Can you hear me, by the way?
Yes, sir.
Yeah. So yeah, I basically, the way I think of it is, the treasury, you guys have protocols and other products you're developing, and so to be able to pay the salaries of all the operations and that further development, the treasury is essentially the runway. And with redemptions and buybacks, obviously that impacts that runway, right? And so understanding the redemption process and how much or how little that may be in relation to the runway, I think, in my opinion, would be interesting to kind of see, or at least kind of consider. Does that make any more sense?
Yeah.
Yeah. Go ahead, Chris.
Well, I was gonna. Where did I pull this up here? No, not this one. Do I have? Yeah. So this is first off, we're in a big shift here, as well, like separate from the whole new DXD token model, we're also shifting to this guild-based budgeting that we just rolled out with 2023. So we're still feeling out exactly how that affects that, and going through the process of a budgeting, through the different guilds in a DAO. We did that last winter in November and December, and I think we hope to improve on that. So I think there is a lot of room for improvement on that, and I don't think we've really figured out exactly how we would go about. I mean, that's the question, is who is making the suggestions on kind of where resources are allocated. I think it's a very good learning conversation for the DAO to have, and so that's why like a good education process. And so one of the reasons I think it's good timing for this was that we had the first half 2023 budgets passed and then kind of funded for the initial Q1, and then the token model, new token model was kind of started being executed, and that basically will give us a couple months to see how things kind of shake out with the treasury. And then hopefully by April and May, there's a little bit more clear understanding of both like what is the potential size of the funding for the second half of the year, and then like, to your point, like what would that look like across guilds. And I think we need to learn how to kind of do that, and it would take some effort across. Hedgehog asks, because the submission time, and sorry, given the cow swap orders have been popular and effective, why is the amount half in the next one? I was going to do it. I think the submission time has also been decreased. So I was trying to do those like every 5 days at 200 ETH. And that was the reason that was done that way, rather than doing like, I think the other ones were like every 8 or 9 days. And the other is partially because I'm also figuring out how to do these orders myself. Dave has done them in the past. And so I was, so I took a couple days to do that, but the hope is that those will be try to do every 5 days for those of 200. And then just maybe on that, a trick I was trying to do is use some stable coins to also purchase DXD right before the WETH order goes through, and that's just soak up the on-chain liquidity. It doesn't look like that would work because CowSwap is basically like pigeonholed us into only having these liquidity orders. So we cannot actually do market buys right now. But I do think it's something that I would like to do in conjunction with the WETH orders. Is the other reason why the WETH orders were smaller, is to do dollar buys on that as well. Obviously, the 16-day wait period is very difficult for that one, but I think shelling point is maybe the right word, Ross, for the 6%. That's kind of where the conversation starts, and kind of there, and that's why kind of educating people now, and especially like being clear to DXD holders on what to expect from a resource treasury expenditure, I think is important. Yes, that is true. I need to get I think I have a couple hours to do. Yes, I need to submit a wrapped WETH order to our Mimic vault that automatically wraps it and sends it back. That can actually go through the normal funding and voting power scheme. That's what we've used before, and that only takes 8 days to do. So this is the one that we did through Mimic before. So that is a good reminder. I will do that today. And a little tangent, but I was kind of, I'd say, proud when ENS got some attention from, I think, some big wigs in terms of using CowSwap for such a large order. I think I was proud to be like, well, DXDAO has been doing that directly through the DAO since last November on mainnet, and I think September on Gnosis Chain. And so I think there's a lot of opportunity that what we're doing with this is really figuring out different new tools and ways of building this, and that's all part of the process of dog fooding things as well. Cool.
I think we're on the
yeah
that one. Okay, so changing gears, there was a proposal that passed recently to change the NAV calculation weights. So ENS got bumped up to 50%, Swapper got decreased to 10%, and this was mainly to protect against manipulation and volatility in the Swapper price, since there's little liquidity there. And then offsetting that with offsetting the value decrease from Swapper with some value, adding that to 50%. So there's more value in the ENS tokens. And I think no one has complained yet. It seems like it's we think it's the right move, and we just think that the committee and other DXD holders should continue to monitor this just to make sure that it's reasonable for all the assets that are in the treasury.
And Swapper is, I think, a good example of, I think we mentioned here some of the manipulation, but I think also some of the potential. So when we think of what is quote unquote backing DXD, right, it's only 10% of the Swapper DXDAO owns. That's not to say that DXD holders and DXDAO does not have a right to that value. I think some of this is actually, I think about 20 million of this is allocated to the Swapper DAO itself whenever that is fully set up. But it's more of, this number is not, again, not meant to take away from the claim, but it's more of, because there is such a small and illiquid asset, that it can't contribute to these kind of redemption and buyback measures, because that just affects things. But to me, it represents also a big opportunity for growth for the treasury, right? Because not only is Swapper a low value, has a low circulating market cap, it's also only contributing 10% now. So you can see how that could be recognized in treasury NAV in the future, and then of course then passed on to DXD price. And I don't know, Swapper's been going up and down the last month and a half. I don't really have any insight into why, but I think there's something about Swapper, I think, benefited a lot from being on Arbitrum early and doing a token launch there. And it's amazing how many token holders and activity sometimes come from just being an early Arbitrum project. And so I think it's something to think about. And then again, you look at Swapper is also the largest DEX on Gnosis chain, right? And has the deepest GNO market, has the deepest WETH market. So yeah. Is it this end of month? Or Arby is coming Monday. Isn't that what people said?
Now they got front run by Coinbase.
Yeah.
Although no token. Yeah. Okay. The next slide, protocol on liquidity. So the original proposal approved mandate called for $1 million in protocol on liquidity for DXD ETH. And as you can see here, it sort of talked about different milestones, adding liquidity at different times. So there's about 400,000 in liquidity that has been approved to be added. It's sort of some of it's been added. 75 ETH and 148 DXD is still sitting in the what's it called, the relayer contract. So that needs just a one more proposal and a bump to get that into the pool, and then that would leave another 600,000 basically that to reach this mandate. I think originally the 130 ETH and 300 DXD was the 250,000 called here at the 60% of NAV, but prices go up, prices go down, so it's 400,000 now. Anyway, we've hit 65, so it's time to think about adding more. And then there's a question about whether hitting 70 for a consistent period of time is reasonable. Just given how the model is working, we may sort of float slightly below it. So I think that just begs the question: do we just add the rest of the 600,000 now, or is there a reason to break it up into smaller amounts?
Right. Like, is there any difference between 65 and 70% from a protocol owned liquidity? Because originally it was like when we get to 70%, that's when the DAO can provide this liquidity. But I feel like we're at a healthy point, especially because there's been so many buys. And one thing we have not done, and maybe we should have done for this call, I'm just thinking about right now. I want to see the performance of this because there's a 0.5% fee, LP fee on this, and I imagine that has helped it beat impermanent loss, especially because it's a nicely correlated one with ETH, so that there isn't too much. Candy Fork has been a LP since December 2020, and it's beat impermanent loss there even for a long time, and it wouldn't have a fee. So I think there is some benefit to the DAO for doing this, or at least protection against the impermanent loss element. And then obviously there's like a couple different strategies in terms of being able to supply like a liquid market. We have the cow swap orders that are coming in wet. There's the redemption balancers, and then there's like a chunk of on-chain liquidity to get instant liquidity for anyone kind of looking at it in that way. So I think that the three-prong approach kind of helps fulfill a lot of those. So yeah, and I should say I think it makes sense to increase this to the allotment from the proposal, and I also think it makes sense to have some of that be on Gnosis chain, because that's also the cheapest place to buy DXD. And I think it's always important to make sure that there's access to smaller token holders, and having them come in and enter and exit through Gnosis chain, I think, is important. And and then just a reminder, the DXD in this does not count towards circulating supply, and then the ETH in it does count towards the Treasury NAV. So there's no effect on the Treasury NAV. Cool.
You skipped one. There we go. Okay. The next agenda item here, just long-term tools. This is really talking about, improving this process, moving forward. So looking at what we can do. So the first piece being improving the redemption balancer, or the redemption process. I know there's in the original wording there was talk of inverse bonds. There's been some thought about inverse bonds, but I think there's a way that there's a reasonable way to think about a redemption balancer as that same thing, as an 8-day inverse bond paying out at 70%, with the 8 days, of course, being the governance period. Could be longer if there are issues with governance, if there are gen battles, or hopefully soon DXD battles. But there's definitely a reasonable assumption that you could say these are the inverse bonds. And there's definitely work that can be done to make them non-custodial for the redeemers. And I think it's a good sort of mindset to start with when thinking about how to think about whether we want to change this and how to change it, whether the duration gets longer, whether percentage of NAV changes at some point. But we're sort of starting with something we know, and then can iterate on it. I think is a good start, and starting to understand what the trade-offs for the different variables are to the system. So I'm for all of these. I think the long-term tools. I think after this slide, we can have a discussion about whether people think this is a reasonable way to think about it or not, or whether people are hoping for a more elaborate inverse bond model. Anyway, so moving on, and then also improving the buyback process. So along with this redemption process, there are the buybacks that can be seen sort of working hand in hand. The the buybacks being the cow swap orders specifically. So one of the big things is sort of an internal question of like, how do we make submitting, approving, getting cow swap orders through better, making sure that they're consistently timed, that the process is consistent, and that they're available just like the member redemptors are. And this will improve with DXGov 1.5, we believe, but that's a little down the road and will require work to get working correctly.
Yeah, I would just say on that right there, there's always this tension between doing something now that works versus trying to build something else that would work a little bit better, but is maybe not a long-term solution. And so right now with the 16-day, if we went back to December and we could see how great I think CowSwap is working, we could go through the process of getting the CowSwap contracts whitelisted on the 8-day proposal process. That probably would make sense, I think, at the time to do that then. But partly that is because CowSwap, I think, has worked so well. But the question is whether now it makes sense to do that, because it does require a little bit more. It requires basically like deploying a smart contract with a set of contracts. And I actually think it also requires another 16 days to do it, where you're using, and so that, I kind of think it makes more sense to wait for governance 1.5, which this is basically a refactored version of the existing DAO stack contracts, right? The ones that DXDAO is running on, holographic consensus and everything. So it's just basically a cleaner, leaner version of those. And when we deploy those, we'd be able to much more easily like add things like this. And so I think there has been a hesitation from the Gov team to want to do some work on this when it will be obsolete when Gov 1.5 is completed. Timeline for that, I would say, I mean, it looks like, famous, always getting in trouble giving timelines, but I would not think it would be in maybe another 2 months there. So it's something to think about, whether we want to try to put more resources into whitelisting CowSwap.
Yeah, and the timeline is also different between mainnet and Gnosis chain.
Right.
So the plan, as I understand it, is to roll out on Gnosis chain first, with the mainnet stuff happening later. So that could then push.
So on Gnosis chain, we could do quick orders now because we don't have a whitelist for the multi-call scheme. So that's another tool we could do now. Obviously, we'd have to transfer funds over to Gnosis chain, but maybe, and I actually like this TWAP order there, especially. I don't know if that TWAP is on Gnosis chain, because that would be like a kind of cheap way maybe of doing that, especially if you do it in dollars. But yeah, I think, CowSwap's got a bunch of cool things off of it. And again, I think they like us because we're kind of pushing them to do different things. And I also think we can talk with them next week, but some of us are going to be in Denver, about maybe some additional, basically, can we combine this liquidity order and the market order? I think Moo Dinner, cool.
So long-term tools, just some other pieces like protocol on liquidity. We're in the process of adding that, but thinking into the future, what makes sense. One of the things is if DXD price is floating around 70% NAV and the treasury is mainly in ETH, and that will sort of dampen the volatility there, especially to ETH. It would make sense to not have to use the full spectrum of a V2 pool, to have concentrated liquidity in some way, whether that's with a V3 concentrated liquidity model, Uni V3 concentrated liquidity model, or more of a stable swap model. But these are all things to sort of explore in the future to improve the quality of the liquidity.
And not to sound like a broken record, but this is a great product for any DAO, right? Any DAO that wants to provide some liquidity on their own token, and literally every DAO, every token project is going to want to do that. So yeah, figuring out how to do that, building the governance tools to do that could be very valuable for this.
Yeah, and thinking about that in the context of Swapper and
Right.
all these big questions that I think the DAO is asking about its product strategy, governance strategy, they're all somewhat intertwined. So definitely something to be thinking about as we go forward. And then the last piece here is data collection, putting in some effort into getting data using the tools that are available to more autonomously pull data and provide it, and then provide dashboards and whatnot for creating, or create dashboards that let anyone look at this data without having to know where to find the spreadsheet and sort of work through it is I think an important thing that the DAO should be working on, just to democratize this process.
Good transition to maybe just another big item that DXD has been considering the last couple of weeks is so we've been we're in the process of transitioning away and finding a new entity, person, individual, group to serve as treasury manager, steward, kind of whatever. And so that has been, I think it's been exciting because there's been a lot of interesting applicants, both individuals and then entities themselves. So last week on the governance discussion, there was Kapartki presented their proposal to basically set up a treasury guild themselves and kind of lead things. Then yesterday, Avant-Garde was on the call presenting their approach and a proposal for doing some asset management on behalf of the DAO. And then like simultaneously to that, the Contributor X and Operations Guild has been searching for an individual to fill one of those. One of them is one of the candidates that considering is on the call, which is always a good sign in terms of showing the eagerness. But I think it does kind of open up a lot of kind of questions or ideas, or just maybe discussions on what is the need from a treasury perspective, or what is a goal from that DXD needs. And I think maybe I just put this in the reply to both of these, to both Kapartki's draft proposal and also the Avant-Garde one, that I think these are the key items for me. And one is provide insight analysis to DXD on treasury allocation changes. Two is execute on investment decisions made by DXD while maintaining DAO sovereignty. And then three is accounting and financial projections. That these are kind of the big three things that need to be able to service through this general role or how it. And then strategically speaking, obviously there's things in terms of yield, in terms of operational efficiency, but I also think it's very important that the treasury dog food DXD suite of products and projects. So we talked about that with Swapper. But then as well, I think just as much of that is Davi and figuring out how treasury management tools can come like out of the box to new DAOs and make that an appealing place to go. So I think those are important things to think about there. And there's also and so we haven't figured exactly how the process of this will unfold, because it's a little bit of a obviously we've kind of learned a little bit how to onboard contributors into a DAO. Even that is not exactly a very scientific process. It takes a lot of back and forth in terms of finding consensus. And then this one's a little bit trickier because we have different entities kind of offering very different services. And so we have to figure out how we'll manage that. But yeah, I just wanted to call attention to basically these two posts here, the Avant-Garde one and the Kapartki one. And there's also videos of each of their presentations in the governance proposal. I should probably attach that to them. And I don't know, I think this is an interesting discussion for a lot of these things yeah, not just as it relates to DXDAO's treasury, but I think DAO's treasuries in general and what the services are. So yeah, if anyone has any thoughts on that, feel. So yeah, we can answer Zag, Connor's question in a second if there's any other thoughts on treasury.
A question, I think Connor's not
Yeah.
this current Connor question, but the one from the meeting yesterday that Connor asked about, servicing redemptions. Really having a plan for that is important, right? Because this is a big part of this monetary policy is a big part of the DAO moving forward and the DAO's policies moving forward, and being able to deal with that in one way or another is I think very important for someone doing that job, right? And being able to fulfill the needs of the DAO. That's basically what you said, but
Yeah.
just reiterating.
Right. It's like a very core, you have to balance, because obviously, you sacrifice yield versus being able to deal with the liquidity for redemptions there is important. And yeah, striking that balance is takes some effort. And then, yeah, I guess Connor, just to answer your question. So I think as Ross said, Ross is working part-time for Candy Fork. You can look on chain and see how much he's getting paid if you're interested. It's kind of coming straight from Candy Fork. So the services you're doing are basically the same that Candy Fork was contracted to do through DXD through the Operations Guild, and is kind of helping out there. I'm trying to basically build more capabilities to interact with other DAOs, and so hopefully kind of freeing up some of the space of my time onto other DAOs. That has not really happened yet, but I'm hoping it will. Yeah, I mean, right now it's, again, DXDAO is kind of paying for one person and maybe getting 1.5 right now, but that's an investment that Candy Fork is making, and to try to build out more DAO services capabilities, because I think it can help service DXDAO, but also other ones themselves. So Ross has been helping out primarily really with DXDAO stuff, but also looking at some of the other things. Obviously, like ENS is another one. We've been active and kind of doing some work there. Yeah, so there's not been like an increase in the payment to Candy Fork. But Ross G has also been like a long time DXDAO community member. So been around for a while, worked at YAM for about a year, doing a lot of operations stuff there. So anyway, other questions, thoughts, kind of comments, anything that we maybe missed? Etherscan down is a terrible, terrible thing, but
we took it down so you couldn't see how much Chris is paying me.
Yeah. I literally have to pay that today. I meant to do that before this. Yeah. Maybe just the other thing while we have everyone here, like I always think it's kind of cool to highlight the products, and like that's really the a lot of the cool things I think DXDAO is building. So I don't know, there's a lot of depressing bear market stuff going around, but I feel like each of DXDAO's products are kind of plowing ahead. So Carrot, the KPI token incentive platform, is, I tried to share this in a email, and the email would not go through because it said that it was the scam link. But this is a Carrot V1 that is kind of being tested right now. I think it looks super, super dope and cool. And so that's yeah, inching for a launch in the next month or two there. Davi just did another launch and has been kind of in, I guess you call it beta testing mode for DXD's guilds for the last 2 months. And also, I think just got a nice fresh coat of paint on its product there that makes it looks pretty dope. I guess both of these look good. And then, of course, Swapper is, kind of doing, continues to work and do a lot of great things and push cool products there. And so the products, as I said, I think the current amount of revenue is about a little less than 100K a year that Swapper is generating through fees. Yes, that's why the link is good to look at, but do not share widely.
I think that's called alpha.
Is it? Right. But this is a beta version, or is that the, And I do think it's now up. We're having a discussion on, a very enlightened discussion on decentralized versus with an S versus decentralized with a Z. I'm a Z man. I mean, Z is just undeniably cooler than S. Like, there's just no, it's the last letter. It looks cool. I understand that it's like English, but like, there's no way things aren't cooler just with Z. I like having things that should end in S, like just end in Z. My adult male, this is too much information, but my adult male softball team was named the Thunder Sharks, which I just think is a great name. Yeah, Powers would be great. That's a little.
Yeah, the fun trivia fact is Russia's.
Okay.
Russia. Apparently, the British English, when the Revolutionary War happened, sounded significantly more similar to current American English than it does to British English.
I hear it's even like Shakespeare is what they say. Is Shakespeare actually sounded like Americans do now?
Yeehaw.
Yeah, I don't think he said, he was from Brooklyn. He was some hipster, lived in some loft in Crown Heights. Anyway, all right, we have gone a little off the rails here, but we're right at the top of the hour. So we'll do this at either the second or the third or the fourth Thursday of the month here, and it'll just be an opportunity to review and go over these things. We'll post this in the forum here. It's 2 different logos. We'll post this in the forum for comments and feedback. There's also some data that you can grab here. I don't know if there's any specific decisions that we need to make. The only one really, I guess, are one kind of keeping on in terms of both the redemption and the cow swap orders there and a regular cadence and communicating that. And then 2, looking to put forward more protocol on liquidity, even if NAV is not at 70%, if it's at like 66 or 67% there. Those are the kind of takeaways here. And then also call to attention to be following along for the Treasury Manager Steward discussion.
I'm looking forward to seeing people and meeting people in Denver.
Yeah, and then I'll be in Denver, Ross will be in Denver, Dave will be in Denver, Sky will be in Denver. Cal will be in Denver, Kaparki, Avant-Garde, Maddie will be in Denver, so should be fun. Awesome. Thanks everyone for joining, and have a happy Thursday.
Bye everyone.
LOL. See ya.
Thanks. Cheers.